Hi, everybody. Hello, Sinatra, Ryan. How are you?
Morning, Dale. You're good?
And Hugo. I had a rough weekend.
Yeah,
I
I've heard.
think
You
I
all right
may have
now?
had food poisoning. No. So let's take a look around. So most likely the dollar has turned with what's happening with the yen and everything here. So, the yen kind of took me by surprise on Friday by doing this. Pretty good break. I think you have to sell rallies, but Ryan, I mean, there's a little bit, when I look at the 10-year, it doesn't look that terrible to me. So some conflict there. If the yen is peaked, then, this was it in the gold, and you would look to buy a pullback maybe here sometime this week, 1734 or so, 1736. So also, the dollar, I guess the line in the sand is this breakout at 93.5. But if the dollar is going to turn bad here, if it is, then who knows? This could possibly be the end of the correction in the S&Ps and NASDAQ, although I look at this and look at where it held Friday, right here. Okay. So that it's in a pretty important low we put in Friday in all the indexes. And, if we're going to hold, we have to hold, look at S&P as well, back to this pivot. So I think the whole thing really revolves around the dollar. A lot of people thought that the dollar had peaked earlier at 93.5, and then we had this one more push and, looked like a good breakout, and it worked for 100. But now it looks like it may want to come back and negate it. And if that's the case, you have to be long everything if this was it for the dollar and we're going to get a big break. What do you think about that narrative, Brian?
Yeah, I think you're spot on, Dale. Yeah,
Yeah.
we said it all last week. Is it end of month? What are these moves?
Yeah.
Take
I know you were skeptical of all the action
spent,
last week. Yeah.
How long did we spend speaking about dollar yen at 109, 110, 110?
Yeah.
And here we are. Cable broke 135, big level on that I was thinking this was going to be huge, and got all the way down to 134, and here we are now just breaking 136. And you think, well, it's not fundamental reasons. People were going on about the shortages and the fuel shortage and the problems last week why it's falling. Well, those haven't gone away, and we're 200 pips higher. So what's the story there? It's what it does now. We can all trade with hindsight, but what does it do now? For me, something like cable getting back above 136, dollar yen getting back under 111. It creates these warnings. We're going to go back into the ranges again. And yields, like you say, the 10s, I would have, if you want to see a strong move, if the move's real, you want to see it sitting above 150, don't you, really? Just from a psychological basis. But here we are below 150 again. And, you got to wonder if it gets down again under 140, it all goes into reverse.
Yeah, I know. So basically what we had was, head fakes into month end that people use to accumulate, especially the gold move was, I think, pretty impressive this day here.
Yeah.
I thought that was a pretty impressive day, the way it reversed and it was diverging down here. And, it's been on the DSI 10 for a long time, 9, 10, no one liked the metals, gold still looks better than silver to me. Yeah. Except, silver isn't giving back much, and it did the same thing too. I'm sure a lot of people got taken out. I think a lot of people called this a breakdown. So we had a lot of head fakes into month end. I'll learn to be more skeptical of prices then, and I never really took that type of concept into my trading. That month end was, just really a technical thing and may not indicate market direction.
Yeah. But if you go back to that gold,
see, I learned from you already, Ryan.
That's good. Can't teach an old dog new tricks, they say, but that's rubbish.
Well, yeah. This old dog is going to be more skeptical.
We're always learning. We're always learning. But you go back to that gold chart, Dale, and just come out a bit to show that big spike low that we had. Maybe go to your daily.
The daily, yeah.
Now, the one thing I always look out for, and when you get those big spikes, those almost flash crashes, is that's not the important candle. The important candles are the ones after. Right. And the first two after, they're the ones that say, okay, we've had a big move, a big blowout, flash crash, whatever you want to call it. It's the two candles after that are important, because that tells you where the market really is. And look where it's coming, just around those lows that we saw last week. Yeah. You know, and you can see that, and all big flash crashes, all big moves, you know, the S&B, all of them. You take the first couple of candles after, because that tells you where the market really is after some event has happened.
So I understand that our leader's back in the saddle, and I know you had a hectic weekend, Blake. So maybe it's going to take you a day or so to get up to speed. But knowing you, you went over everything before today's session.
Well, good morning, Dale. It's nice to be back. And I'm sorry that you got food poisoning.
I think that's it. I had vertigo Friday. Where you ever experience where things keep spinning on you? Yeah.
When I drink a case of beer, that's what usually happens to me is vertigo. But
I was going to say, you were saying about him having a hectic weekend. If you look at the photos, he's spinning on the piss all weekend.
It's great catching up with one of my old buddies. I was just, I was posting in our chat room. I was posting the pictures that I tweeted, and I forgot that I actually tweeted them. It's been such a whirlwind over the last few days, but I managed to sit down with a buddy of mine that I hadn't seen in nearly 30 years and meet his wife. And I've known about his wife since we were 18 years old. Since when you're overseas and you talk to your buddies that you're stationed with. It's like I knew about his high school sweetheart that he ended up marrying. It was really cool. It was a lot of fun. And we did drink a few beers, but I didn't get vertigo. Sorry, Dale.
Oh, okay.
I didn't get vertigo, but
Richard Adams is saying epilepsy. My stepson has that, Richard. I feel for you. So, I'm still not 100%.
Well, you know what? That's what happens, Dale, when you go eat fish at a buffet. I'm just joking. I'm joking about that. That sounds gross. Anyway. But and that there's one of the arguments to go plant-based. There you go, right? Yeah. Go plant-based. You don't have to worry about that stuff.
Yeah.
Well, get food poisoning.
No food poisoning here. So, hey, look, and I'm glad you sound like you're at least faring all right now.
I have a few hours in me.
Gosh, it's there's nothing worse.
The show must go on, Blake. That's always my
professional to the end. Yeah.
Yeah. And, I noticed there's a lot of things, big developments. And you guys were just talking about, the dollar and your narrative about, hey, if the dollar breaks down, that's the time that you need to be long everything. I agree with that, but I don't think that's what's happening. I actually think that the market is going to continue to move lower. I'll pull up the dollar in general, and then I'm going to pull up some specifics. And by the way, Stelios is not here. He's traveling home from going to his, and he's going to have to explain it to you guys. Is he in Italy? He's somewhere at some cool car show somewhere, like a lifelong dream. He has a friend that gave him an opportunity to go to this, awesome car show. So I'm going to let him explain it, but I think he's traveling back. I want to say he's it's not like he's in Monaco, but he's somewhere I want to say Italy. Anyway, here's the dollar. This is really critical support here. Now, I want to point out that we actually had a big rejection of the 38% retracement of the, this is the really the post COVID move. And that you have to keep in mind, wow, that was a big rejection last week. When I came back into our chat room, people were like thanking me for the volatility last week. Like, thanks for being out, Blake. You created a lot of volatility. Fantastic. I'm glad I could appease everybody. So now that I'm back, volatility should, slip to zero again. I'm joking, but notice this like technical rejection of the dollar. So, we had this previous support, that's post-COVID spike low, or move, excuse me, back in March of last year. Previous support, resistance, and the 38% retracement of this it was this previous 38% retracement. So really big rejection, right? And actually, I think I have this, let me move this really quick. You can see that high to low, 38%. So I guess the point I'm trying to make here is the dollar, really stopped where it needed to. Like if you're a dollar bear, that was it. Like it shouldn't go any higher than that. Now, here's the flip side to that. If the dollar breaks above this, 94.50 level, we can actually, maybe round that up a little bit to because of the previous support, like the 94.65, 94.70 level. We break that, you can't be short dollars. Like that is the last place you're going to want to be. Like there's no, I don't believe there's any if and or but. So the good news is, from a trading perspective, what happened last week, that is now key resistance. And if we break above that level, like I said, and I'm going to say it again, that is the last place you're going to want to be, is short dollars. And probably the last place you're going to want to be in that situation.
Is that your bias, bro?
Well, that's, I'm buying dollar dips today, hopefully.
Okay.
Yeah. Right. So I've got a few orders out and if you guys are in the chat room, this is the ForexAnalytix chat room guy, by the way. If you guys are in the ForexAnalytix chat room, and it's been kind of a slow morning, but this is me. As soon as I got up, got in front of the computer. It's about an hour and a half ago, and you can see just the chatting that's gone on since then. But if you're in and that's just our general chat room. That's not including the Forex Flow chat room where Ryan's at, and the news and research, and the trades room where I closed out the dollar Mexican peso longs this morning. Temporarily, at least for the time being. But that's where I'm at. That was a
good trade.
Thank you. I think it's that close that pattern in play. And I explained everybody in the ForexAnalytix chat room why I did that. But I think you buy dips in the dollar because I don't think that stocks are
out of the woods.
No, I don't. And here's the S&P. And just remember, we have had, let's not forget, we've had a massive move higher over the course of the last, year and a half. And we've come out of a big ascending wedge. We have not even met minimum expectations of coming out of that wedge. So that's one thing that I have to point out. I know everybody's like, oh, hey, look, we've corrected enough.
Well,
what is that?
They're all saying it's so oversold on the RSI. It was before the bounce Friday, Blake.
I probably was. And look, we had here, let's go to a 4-hour chart.
But remember how, people say the most bullish thing a market can do is get overbought and stay overbought. Why can't the inverse be true?
Oh, it totally can. And I'm telling you guys, we will be in a market, and I'm not saying it's going to be today. I'm just saying that we will be in a market sometime in the very near future where you will say, oh my God, the stock market will never go up again. And you're going to feel that way. And I know most of you have not been blessed with the fact that we do have two-way markets, but there are and is a such thing as a two-way market. And there will be times where we sit around and go, oh my gosh, the stock market will never, ever bounce ever. And right now, I think we are in the process of creating a pretty major top in the market. I think we're going to be in a long-term, probably consolidation. Now, and when I'm looking at the S&P here, the one thing I need to make sure I'm very, explicit on is I'm not expecting a crash or anything like that. I think what's going to happen is you're going to see a consolidation of this big move, big bounce. And, we're going to work off a lot of excess capacity here in the markets. Coming out of this ascending wedge, I'm expecting us to eventually break the 200-day moving average and trade back down to 4,000. This is the 38% retracement. And it's not going to go straight down. We are going to have bounces, and we will continue to create higher highs and higher lows. And, you have, and I know a lot of you guys are thinking, oh, well, how about the infrastructure spending bill? And how about all the big, the legislation that might be passed? All that's all factored in the market. We all know that's coming. What I think the bigger unknown, and Ryan could probably add to this, the bigger unknown moving forward is going to be, how growth slows and how inflation stays persistently high. And there's an actual term for that in the market, but I think that the economy, global economy, is going to be facing some serious economic headwinds over the course of the next, let's call it 6 to 12 months. And that's probably going to be the catalyst that actually weighs on the market, and I think all the way from 4,000 to maybe 3,600, none of this is off. None of this is off limits, in my opinion.
No.
None of that's off limits. That doesn't mean we're going to 2,000. That doesn't mean the market's going to sell off 50%. And I don't think that we're going to disrupt any long-term bullish sentiment by dropping even down to 3,600 in the S&P, which is very far from where we're currently at. I mean, if you think about that from the highs, a move like that is a 20% correction, which is normal in a bull market. And you get past 20% and everybody's going to go, oh my God, it's a bear market. And, this is a, bear market. We're really going to fall now. And then that's usually the time that you get a severe bounce in the market. So, but I think that we will be trading down here sometime over the course of the next 6 to 12 months. So, but it's not going to be a straight shot. And the reason why I point all this out is because as stocks move lower, guess what the response of the dollar index is going to be eventually? Yeah, it should be higher. So that's just my 2 cents with what's happening right now. That's why I think this area, let me grab the dollar index here, and let me grab, oops. Let me grab this box here. I think this area between, you see this breakout point here?
Yeah,
that comes in at 93.50, and this breakout point right here, which is where we're currently at, 93.75. This is all the support zone for the dollar. And when I do analysis, everybody knows this that's listened to me long enough, I don't look at support and resistance as an exact level or an exact science. It's zones.
A mattress.
Yeah, a mattress. That's a good way to look at it. Considering I put together my mom's bed yesterday, I was like, I was after moving all this stuff, I was building my mom's bed because they're in their 70s and knees aren't as good, so I was anyway. But that was funny you said that, because I was a mattress on the mind. So yeah, I mean, that's going to be a big support level that is going to be formed, in my opinion, here in the dollar index. And I think that you've got to be buying dollars on dips. And that's why I'm looking at the dollar as being an opportunity to be long, on these dips lower. So let's hear from, and I'm not sure if Steve has come in today, or if he's going to be able to make it in here. I know Stelios is out, but Ryan, what are your thoughts moving forward with the dollar here? Because we have seen some volatility this last week. The dollar index has, Ryan, hold that thought. One of the things I wanted to bring up was the cryptos and the bounces that we've seen, like in Ethereum and Bitcoin. By the way, we had a big rejection at the 618 retracement in Ethereum. And I think that, you could see that rally, that now intraday, we got a new high in price, relative strength was divergent. I think Ethereum is now going to correct back towards 3,000. I think FX Macro today, he pointed out on Twitter that B of A came out with a, pretty bullish piece on cryptos. And, that's probably intraday, that's probably going to mark up a high, near term. So, when you get these pieces, first time, right up from a Bank of America, which is a, pretty big investment, bank here in the US, it's probably going to, cap us near term. And you can see the 49,000 level in Bitcoin, which I'd been targeting all last week. Because before I left, I said, hey, we're breaking this, this descending trend line at 43,000. We should see 49,000 again. That's going to be the next resistance. We tagged it, previous support, current resistance, again, divergent relative strength. I wouldn't be surprised to see Bitcoin back down at, 45, 44,000. I think those are realistic expectations on a pullback as we consolidate. I think these cryptos are the bigger names, not the altcoins. They're in a consolidation phase. Sorry. Okay. So I want to go back to Ryan. What are your further thoughts on the dollar and where we're at with the SPOOs based on the volatility that we saw this last week?
Yeah, I think you're right. But as we've learned from the last decade or so, and going through QE, the central banks, when they're looking at the stock market, what the stock market's doing, if we're going to see something like a stagnation, whatever you want to call it, if the inflation's high, then market's going to want central bank to raise rates, but they're also going to want to support the economy. So which way is central bank's going to go? They're going to go dovish again, and then start talking about QE again. What's that going to do? Stocks are going to go up again, and then perhaps the dollar comes down again. But if you've got to look at it two ways, either the economies are going to go the right way, which is inflation is going to come back to a generous level, let's call it. Economy is going to hold the recovery. Stocks are going to be supported. So you're going to get the QE correction, let's call it. It's not taper tantrum or anything like that. It's just the natural correction in stocks.
Yeah.
Now that the punch bowl's been taken away, and then they're going to start building. Because it did after the GFC when they first pulled QE, stocks started going back up again because the economy could stand on its own 2 feet. That's supportive for risk all round. But in the short term, I don't disagree with your view on the dollar. On a more shorter term basis, I think over the next couple of days, we're going to see some of last week's moves correct. Further out, that's where we need to look at. I mean, NFP on Friday, they're huge now. I mean, is it really going to change the Fed tapering? Unless it's a completely collapsing number like minus 500,000, even a negative 100K. I don't think the Fed taper is going to be changed at all. They've forecast it long enough. But we're going to shift next year into rates. That's going to be the big thing. And if we're talking high inflation with a falling economy, what the market does with rates is, I think, is a big uncertain to me. I don't know if the dollar index rallies and stocks fall, or if it goes the opposite way. It's, for me, next year is going to be a huge learning process for all of us, I think.
Yeah, and that's some great points, Ryan. And I want to go back to what you said about NFP. I'm gonna.
Where did you find that smart kid with the British accent?
Man, I'll tell you. Just for those of you guys that don't know, that are not, don't know Ryan from Forex Flow, who recently joined the Forex Analytics family as one of the primary partners here. Ryan had been with Forex Live. I mean, what was that? 10 years ago, 8 years ago?
Yeah,
pretty 10, much. 10 years ago.
Yeah.
So, he worked with Adam Button over at Forex Live for many years, as they took over from Jamie Coleman, who was
Jamie. I remember Jamie.
Yeah, Jamie and I used to talk 15 years ago when he was only on was he with Reuters? No, he was with Reuters. He was a Reuters dude, I believe, or a Bloomberg guy. Anyway, wherever I used to get my news way back like 15 years ago, and I can't remember. Anyway, I have a hard time remember what I did yesterday, let alone 15 years ago. Anyway, but Ryan's been with us now on the ForexAnalytix team, and I've had nothing but mad respect for Ryan over the last decade that I've actually known him. So you guys should definitely be listening to Ryan, and also he's now a huge presence in our chat room as well. But Ryan, I kind of, the one thing I want to point out, I don't want to say I disagree with you. I think inflation data is going to continue to be important, but I do not think that like the jobs report is going to be as important anymore. We know when the Fed is going to start raising rates, let me rephrase that. We know when the Fed is going to wrap up tapering, and we now know the dollar amount. So we've put 2 and 2 together, and we figured it out. We're going to be wrapping up taper by the end of the year. Now, what I would worry about is if we had consecutive, like if we had a really bad NFP, I think the market will shake it off. So like, let's say that our jobs report was well below expectations today, this next week or on Friday, it could be, but let's say it's well below expectations on Friday. I think you'll get the market's attention, but the market will shake it off. So I'm hoping that we see some poor data, the dollar dips, I'll buy it. Cause I think that the market will go, yeah, this is weak data, but we already know what to expect from the Fed. They're going to taper, blah, blah, blah. I think what we'd have to worry about the following month, going into November, would be if we had 2 consecutive pieces of really bad employment data. I think the market is going to be more concerned about inflation. I think those are going to be the big, the real sticky inflation that we have over the course of the next, several months. I think that's going to be the bigger issue. Right.
I agree. And just one thing I want to throw in quickly is that we had a story out last Thursday, late Thursday, early Friday, from the St. Louis Fed. Apparently some model they've got that watches some form of employment data. I can't remember, home base or something it's called. And their models have predicted up to a minus 818K NFP on Friday.
Really?
But that's on there's a lot of intricacy to it, and because they've got seasonally adjusted numbers and non-seasonally adjusted forecasts. So the market's looking for like 500,000 jobs. Like that's somewhere in that neighborhood, right? It's got quite a tight range. It's looking for 500K, I think, generally, and a fairly conservative range this month. Something like 300,000 to 650. Before it's been 300 to 1.5 million. So much more conservative. But this St. Louis Fed,
they're setting up a low bar to beat it, maybe, huh?
Potentially. But this
clearly not made from the same people that have never modeled a recession.
Steve, this is the Fred. The Fred do a lot of data. They do a lot of data analysis. I think that's potentially injecting a bit of nerves perhaps into the number, or a bit of indecision. So it could be a very volatile one compared to others in terms of price moves.
Well, that's really good to know. And like I said, if we get a, let's say it's a, what's going to happen if it's a number like that, the market will quick react. We're going to see this big move, and then everybody's going to go, oh well, and they're going to come up with the explanation you just came up with and say, that was this month, and it's going to be an anomaly, and that's why you got to buy the dip on any. If you see a reaction, I think you got to fade that reaction based on what you just said. And by the way, just a little heads up before we go into Dale's very first interview of the week with Nick from In the Money Stocks.
Yeah, Nick's not here yet.
Oh, he's not. Okay, well then
Yeah.
I can briefly explain. The euro dollar, we have a nice little inverted head and shoulder pattern that should take us to 116.50. So if we get to 116.50, that might be a level that you look at for a possible short, I would say, because, you know, like I said, I think the dollar, you want to be a buyer of that of dollars on dips, and that might give you an opportunity. And by the way, I still think that, you know, the euro, you have to respect the fact that we have broken some pretty key levels of support. We continue to make lower lows. I think that, you know, we're eventually going to see 115 and quite possibly even lower. You know, 113 would not be, I don't think is impossible. Excuse me, impossible anymore. So just a little heads up. I think you want to be looking at, you know, potential moves here.
Eagle eye.
Yeah. So Nick from In the Money Stocks is not here yet.
He's here now.
Okay. Hey, I'm going to let you go and I'm going to let you take over. But guys, I need to mention this. And even though we only heard Steve's voice for a very short period of couple sentences there, Steve, you'll see him on the Morning Edge, which is specifically for the ForexAnalytix community. Which, by the way, Steve has been building the bias chart every day while I was gone. He was filling in for me, so thank you very much, Steve. You'll see pleasure. Us there. Yeah, we'll all be there here in about 45 minutes with you guys, going through all the major currencies. I also want to say, if you haven't taken advantage of the pricing for ForexAnalytix, we have offered. This is our new. It's our seasonal offer.
Pull this deal already.
Yeah, it's it's a great deal that a lot of people like to hold out for, because, you know, you buy 1 month, get 1 month free. You know. You get basically half off on almost half off, almost 50% discount. It's a huge discount.
Because after the pandemic, we're paying more for everything after the pandemic.
Yeah, and our prices are coming down. So I don't know how that's supposed to work for what we do as a company, but we should really rethink that. That's deflationary. That is deflationary, I guess, huh? Not the best ideas for all of us. Well, anyway,
you know, we want,
but it's good for the people at home. Yeah. What's that?
We just want to give people the opportunity that, you know, it might be an issue to you know, have a good deal. What's wrong with you know, wanting to help people and give them a good price when everyone else is ripping us off?
There you go. All right. Well, hey guys, I'm going to pass it over to you, Dale.
Right, Ryan.
Have a great interview. And Ryan, thank you so much. Steve, I'll see you guys on the Morning Edge here shortly.
Steve, it was good hearing the sentence, man. I miss you, man. All right. Nick, welcome back to Face, my friend. How are you?
Hey, Dale, how are you, buddy?
Good, Nick. It's, you know, always great to talk to you. And, you know, there's a lot of debate right now, Nick. If you want to share your screen, maybe you could give us a few looks.
Yes, let me get it all set up here and just make sure this is the right one. I believe that looks good.
So I remember on our last interview, you said years that end in one were not usually positive years for the market.
No, they can finish positive, but there's going to be a lot of volatility, and you could just go back and look at 2011. I mean, that's the last time we had a 1 year of a decade, and you could just see how volatile that year was. It took the Federal Reserve really till the end of the year, basically October, before the market started to make another advance into the end of the year. This time around, we kind of peaked out on right around the just before. Or I should say early September, right before the equinox.
Yeah.
So we're in turbulent times right now as we speak. Here's a chart of the S&P 500, if everybody could see, and
we got it.
You could just see how, you know, the market has been really, really turbulent. So again, it lives to fight another day, because when you look at a weekly chart of the S&P, it's not broken yet. The weekly chart is still intact. We're sitting above the 20-week moving average, or right on it, I should say. above the 50, 100, and the trend is very strong. But it's been really a choppy year this year. It has been.
Yeah, grinding uptrend, nothing really impulsive, you know, the whole thing.
And we've seen a lot of bear markets in a lot of different places, the SPACs in particular, right? They were the hottest things.
You know, there are some people that are, you know, getting bullish that were bearish, and we've gotten, you know, the chart looks weaker to me and they're turning bullish, and they're Ellioticians. Do you see any reason? And they have other methods. They were looking for a crash, and their work saying because of the action that we have right now, they flipped. Do you see any reason that if you were bearish from near the highs to flip yet?
Yes, I do. And it's very, very important to take notice why. I like to look at all different time frames. And one thing, like I just brought up that weekly chart, and you'll notice that we're still holding trend. And the markets had a dramatic fall, but realistically, this is only 5% or so, 6%.
Yeah.
And then we're still just, we haven't taken out any prior levels. You have to take out one prior level before you'll go down and test another. And the markets were defended, obviously, on Friday. And here we are today. I mean, I could put up the futures. You can give us a little bit of a better perspective. But here we are today. And, you know, futures are a little bit lower, a little bit weaker. We seem to continue to climb the wall of worry. But I think you still got to be a little bit cautious going into October, November. And then December, I know historically is usually a good month for the markets. But you know, we have a big astro event going on right around the winter solstice. And, you know, also around there, you have a lot of astro going on. You have a big Saturn aspect going on there as well. So I think
maybe now, we rally into that into the end of the year.
That's exactly what I was going to say. We could rally into that. But I got to tell you, after that, I would be very, very cautious in 2022. I didn't think this market would hold up as well as it did in 2021, especially. I was very bearish, Dale, and I even said it on your program going into March. And ironically, that's when the Archegos hedge fund blew up and the market rallied. So the day after that, we got news of that Archegos Capital hedge fund blowing up. They were highly levered, I believe 10 or 20 to 1. That's when the market rallied. So it just tells me the central bankers threw a ton of liquidity into the system. And, you know, that's really probably the story.
Yeah. Okay. All right. And is it hard to have conviction on anything? Like where are you at on the dollar? You know, the dollar looked like it had a breakout over 93.5, and now we're pulling back into the zone.
Yeah. So I'm going to pull up a continuous dollar chart. But remember, I talked about it right on your program. I said, I'm not bearish the dollar. I'm actually bullish the dollar. And I made some good money on the dollar trade. I missed this last one. I just didn't get involved. I just said, you know what, I'm going to sit this one out. Now I think the dollar at the moment is a little top heavy. So we'll probably do some more backing and filling. But pattern pending, we could see the dollar get to 98 eventually. And I think that'll happen more towards the latter part of the year or even into next year. But I am still constructively bullish on the dollar. Near term, I think we need a little bit of a breather, a little bit of a pullback.
Okay. Anything within the dollar that you favor specifically, or you just mainly?
Well,
you see anything like with yields? Go ahead.
No, well, we could get to yields in a moment, but I always think, you know, whenever I look at the dollar index, the euro is the most heavily weighted against it. Then you have obviously the British pound, Japanese yen. Overall, I think the euro now puts itself in a little bit of a pickle. I think that could get down to around 109 ultimately. But in the short run, I think it's due for a short-term uptick right here for probably a couple of weeks. Okay.
All right, buddy. So you want to talk yields? Are you agnostic? And do you believe in the yield US dollar yen correlation?
Well, there's some correlation there, but all correlations fall apart. But my theory on yields are that we are ultimately going a lot higher, and the market is going to force the Fed's hand, and the Fed ultimately will have to taper. But right now, when I look at bond yields, I'm not so sure that this last move is the move up to around 250 on the 10-year U.S. Treasury note. What I think we'll probably do is a lot more backing and filling here, and then we'll see this thing really rocket ship up. When I look at, say, a weekly chart, ultimately we probably got to get to around 240 to 260 before yields will really stall out. At the moment, I just don't know if this is the pattern yet to do it. I'd love to see one more little double bottom low, or maybe even a low into around 110, 107. And then I think yields just take off to the upside. At least that's the pattern structure I've been looking for. And I've been waiting. It's been a long go for these bond yields to really make a move. But they did bottom out right here in March 2020, and they're making higher lows on the chart. And that's really all we need to know. Eventually, they're going to, see themselves, the 10-year will see themselves above 2.25 to 250.
Yeah, okay, I'm with you. So right now you're agnostic.
Yeah, I think we'll do a little bit of backing and filling.
It's kind of, it feels like we're that way in the market on almost everything we've talked about right here. You know, I mean, it's like, certain moves were overdone, and now there's going to be backing and filling. The dollar had a nice rally. Now it's going to, pull back for a while, but ultimately higher. So what do? Do you just, when you have opportunities, trade your bias and put a piece on here and a piece on there, or wait for the signal?
No, right now I think you could trade around markets, particularly in stocks. Certain stocks are getting hammered, others are doing well. You got a lot less stocks now that are doing better, a lot more weaker equities. But if you can find really, really good institutional support levels on bigger time frames, those are your trades. And that's all it is right now. It's just short-term trading, swing trade style stuff. It's very hard to get any conviction type trade for longer term holds.
How about the gold after its recent flash crash a few months ago, and then last week we put in low at 1720 level? What do you think?
So when you look at gold, and I'm just going to throw up a daily chart here, we noticed a couple things. Gold got trashed in the June expiration, which was quad witch. It also got trashed recently in the September expiration, which was quad witch. So gold right now can chop around, but overall the trend is down. I think a move up to around 1870 is possible at best. Right now, I think the way gold is acting, you probably see a move into 1810, 1820. I just think it'll struggle there. Max upside would be around 1870. I don't see it going much higher than that overall. I think you'll put in another lower high, and gold can go lower. I own bullion. I own gold and silver bullion. I have since 2003. I've never sold a single ounce. But right now, the chart, that's what the chart's telling me. And that's all I go by.
And energy has been a star this year.
Energy has been a star this year, and I did not think that was going to be the case. I really thought the Biden administration, with all of their regulations, would have killed energy like the Obama administration killed coal. But, the world depends on oil still, and that's just what it's telling us. And oil still looks strong on the charts. I did have a short on oil a while back. I got out I believe in July, and I never put it back on. And here we are now, around 76 a barrel. And I think oil still is holding up pretty well. I don't see a big downturn for oil right now.
Yeah. Any upside targets? Are you in the $100 camp?
I'm not in that camp yet. I think you get to 78, maybe 80. I think that's a fair possibility. I even think you're going to grind up there, though. I don't think it's going to be an easy move up there. Obviously, geopolitical events can always change that, but that's what I'm seeing on the charts right now. As far as energy stocks go, I always like to watch the XOP and the XLE. Both are the XOP has higher to go. Ultimately, it's going to be a grind as well, and the XLE I think can go higher up to around the low 60s, maybe 63, 64. But that's going to take a lot of time. It's not going to happen overnight.
Okay. Anything else on your mind, Nick?
Well, right now, I'd like to just say that this is a grinded out type year. Every time I see a gap up, I think the markets are going to fade. And when I see a gap down in the pre-market, I think they're going to rally. And I'm going to stick with that theory because it's been working fairly well. But ultimately, this is still going to be a choppy, sloppy, duke it out type year. I don't know exactly how this will all shake out until the patterns unfold a little bit more. But remember, there's lots of equities, whether it's semiconductors that I follow very, very closely, that still look pretty poor on the charts, although they did have a good Friday coming off of the lows. But, if you see these semiconductors break down, then I think you got to be really, really careful. Either way, I'm not a big fan of tech this year. I haven't been, and I think you got to still be very careful with technology going forward, even into the end of the year and especially next year.
Yeah, Nick, I follow some of the FANGs, and Facebook looks lousy, and Apple is, down about $18 from its high. And there are a lot of, of the mega cap techs that don't look that great.
Yeah. And if you think about it too, look at Microsoft. I mean, it had a great day on Friday, but look at the chart below the 50-day moving average. It broke below that September 20th pivot low. These are not really very good signs of strength. And I just think going forward, technology has had such a run. I just think that run is done, especially when yields go up. When yields go up, tech does really poor. So
you buy the banks on weakness, and you sell any strength in the mega cap tech.
You could do that. Although the banks look a little heavy here, a little top heavy here as well. I'd probably look at more like the cyclical names. Just buy anything in the cyclical area. I think that has a decent chart, decent support. I think that will get you through. But this is that kind of year. It's a trader's market. I mean, I've all the years I've done this, the 1 year of a decade has always given me the most trouble. And it continues to be that way even this year.
Well, may you live to see another 1 year.
Thank you. Thank you.
How about several?
Yes, you too, Dale.
How many do you want, man?
Well,
how many?
In this upside world, I'm not sure I'm going in for more than 2.
All right. Well, at least 20 years, and I hope you retire on an island for at least half of those.
I would love that, and that is actually.
You'd still trade, wouldn't you?
I would. I would always.
It's like being in the mafia, right, Nick?
Well, I guess it is. I don't know.
I didn't mean to touch on the sensitive subject. Right?
Once you're in, you can't get out, right? That's what they tell you.
Yeah, it's Hotel California. I've tried.
Hotel California, right?
You can check out, but you could never leave.
You can never leave.
And take it from me, guys. Everyone listening to my voice, I've tried I've tried a few times. So anyway, from one addict to another, Nick, it was great. From one action junkie to another, Nick, it was, thanks for your giving spirit and coming in here and sharing your views, because I know, what you have to go through to get good. It's still challenging.
That's right. But believe it or not, it's the challenging parts that make you better. It's the challenging times that will make you a better trader. And I try to tell that to a lot of young traders when they lose on trades, because these young traders that have come in recently, Robinhood traders or eToro traders, they only know a bull market, and bull markets make everybody look smart. So I always tell them, I said, listen, when you get through a bear or two, then come talk to me. I said, until then, I said, enjoy this bull, but it's full of bull. So it's more,
it goes back even further than Robinhood.
Oh yeah, it does.
I mean, I say a generation.
Oh, absolutely.
What do you think?
I agree 100%. I just bring up the Robinhood story because there's so many, I have a nephew that's 22 years old. He thinks the business is easy. And I said, listen, kid, this is anything but easy. I said, I was in an office.
That's an oxymoron. Trading is easy.
I was in an office in 1999 with 800 people. Everybody was making money hand over fist. Came 2000, that office shut down with 5 people. So, it just goes to show you how fast things can change. But the real challenge will come when the bear really arrives. And I would be cautious. I don't know if we get the big bear. I think that's still some time off, but I think we're going to get some bears in here as we get towards the latter part of the year. And even right now, I think you still got to be careful. October.
Yeah, I mean, bears don't go into hibernation till the winter, till the solstice.
That's right.
Why can't that event be a major crash flow?
It could, and this is the time where you have to just protect yourself.
Because people couldn't find the right toys for their kids, and their kids because of all the supply chain. Yeah. So they can't find, and so people are real agitated, and the market sells off.
Well, it certainly can happen, and I mean we've already seen a September dip, and a lot of people didn't think that was possible either. And then we have a lot of geopolitical events going on. I normally don't even care too much about.
All right, I want to know what you think is going to happen with China. I mean, is there going to be an accident with the way they're flying over Taiwan invasively?
I think it's inevitable that they're going to go and invade Taiwan, but they have other issues too. They have a Gorges Dam that is on the brink of potential collapse, and they're going to have to deal with some major astro events coming up. So they're going to have to be careful.
What about the draconian things they've done as far as reverting back and persecuting guys like Jack Ma? Yeah, do you know where he is?
Sure. Oh, no, nobody knows where he is. I mean, yeah. When's the last time anybody's seen Jack Ma?
And deciding to deleverage and try and manage a broken real estate market. And I mean, what do you and maybe they want to export a credit crisis to the world.
Well, they are. I mean, they're probably not going to export a credit crisis right now, just because things are probably more China. They don't let other entities or other big banks really go in there. So that might be the saving grace for the moment. But overall, I mean, when you think about what is going on there,
they're a third of the world GDP.
They are a third of the world's GDP, and they're potentially going to get bigger as well. So I mean, we're just looking at a country that just calls the shots. Look at the Chinese ADRs in the U.S. I mean, look at Alibaba. This is the Amazon of China, which has 1.5 billion people, and just look at that's the wrong ticker, but look at this. Look at the stock. I mean, This is a horrible showing. I mean, you can't make this stuff. Watch this. I mean, when a stock takes out its monthly chart 618, I mean that's not a good sign. But this is all from Chinese rhetoric. I mean, it's not that the company's a bad company. It's not that they don't have they don't make money. It's just Chinese rhetoric, right? All of the Chinese ADRs, doesn't really matter which one we look at. They're all terrible. Look what they did to the Chinese education companies. Now, some of them may have been scams. And in all fairness, a lot of these Chinese companies are frauds. But I don't think a company like Alibaba is a fraud, and I don't think Jack Ma is a fraud. I think he's an actual person with some intelligence that built something.
How about credit spreads? I heard they really blew out with what was happening with Evergrande.
But can we really get a real read on any of that stuff? They're probably a lot worse than we even know about. I mean, but we can't really get any truth out of there. You can't get any real read out of there. There's nobody allowed to investigate it. I mean, even in the U.S., we barely have a media now. We're not allowed to investigate anything, right? So, we're seeing this shift happening, and they're leading the charge.
Nick, see, I didn't even know we were going to talk about this. So, it's great. It's great just to jam with you.
Yes, it always is.
In the markets,
It always is.
So I appreciate your time this morning, and wish you a great fall trading season, you and all the people you work with, Gareth, everyone, and appreciate you, my trading warrior brother, Nick Santiago.
Thank you, Dale. Appreciate it a million. God bless you, and you do a great service to everybody.
You do too, Nick, and you can find Nick at ITMS, and the Gareth Soloway's with him. They have some great analysts there to check out. Thank you, Nick, so much for just bantering and it's fun when two pros get together and talk about the markets, right?
Oh, it's great. I absolutely love it. And thank you so much for having me. Always.
We'll break bread. We'll break bread and raise a glass someday. What do you think?
Let's do that soon. Let's do that
All
soon.
right. All right, Nick. Adios.
Dale, take care, buddy. Thank you.
All right. So that's it, everyone. Hope you enjoyed it. Nick's a pretty cool guy. He knows what's going on. Follow him at ITMS. And in 20 minutes, the best team on the net is going to be collaborating to get you guys straight about the day and the week on the Morning Edge. And I know you guys feel like joining. Those of you that are still here, go ahead and take Blake and the team up on their discounts and invest in yourself. Okay. Because I'll just tell you one thing, because I've seen hundreds of traders, just like I've interviewed hundreds of traders, and you either pay to learn or pay the market. And I'm hoping if you choose the latter, it's a community college tuition that maybe the Democrats could make free, but it's usually not free. So that's it. Don't just count your memberships, count your blessings. See you, Laura, Anthony, Monica, Sinatra. I'll see you guys. Have a good day. Seize the day. Carpe diem. Adios.